Olivia is on board member of the UK Green Investment Impact Investment Institute, and she has been working on a number of initiatives. She's been member of the Financial Reporting Council, and she also worked with me on the Pontac Financial Tech Fund, startup fund. And Olivia, over to you.
Thank you, Dr. Cole. It's a pleasure to be with you all this morning. Perhaps I'll start with saying a few words about the Impact Investing Institute, where I'm a board member and I lead for the Institute on management, measurement and reporting of impact.
Well, Olivia, while you're doing, I see Aditya, Mukund and Ajit, members of your team there.
Yes, indeed. I'm going to introduce them in just a very short while, Dr. Cole. Thank you very much. Hopefully you can all see the screen there. Impact Investing Institute is partially funded by the City of London, the Department for International Development, the Department for Culture, Media and Sport, and a number of mainstream financial services organisations. Quick reminder that impact investments are investments made with the intention to generate positive, measurable social and environmental impact alongside a financial return. We sit next to sustainable investing in the spectrum of capital that we use, and the focus with impact investing is in contributing to solutions, sustainable investing benefiting stakeholders. You'll see some spectrums of capital where impact investing is a subsector within sustainable investing. Here at the Institute, we very much focus on the unique role of impact investing in contributing to solutions. Our vision for lives to improve as more people choose to use their savings and investments to help solve social and environmental challenges, as well as seeking a financial return. And our mission is to accelerate the growth and improve the effectiveness of the impact investing market, ensuring that more capital can contribute to the achievement of the Sustainable Development Goals. 3 objectives: to mobilise pools of capital, to make capital more accountable, and empower people to save and invest in line with their values. And we're independent, we're a non-profit organisation, and we aim to deliver change by educating, raising awareness, providing tools and information on impact investing, and advocating for policies which enable impact investing. And just one slide here, which gives some context. I know Aditya and Mukund and Ajit will talk in much more detail. But here's just some context for you on the momentum in sustainable investing. You can see here green, social and sustainable bonds having taken off in the last few years, particularly driven by green labelled deals, climate related investments. So without further ado, I'm delighted to introduce our first speaker, Aditya Narain. Aditya has over 25 years of experience in the equity markets. He's the head of equity research and India equity strategist for Edelweiss. And in previous roles with UBS and as a managing director at Citibank, Aditya was a banking and financial sector analyst, India equity strategist and head of research. After graduating in economics from SRCC Delhi University, Aditya was awarded an MBA from FMS Delhi, and Aditya is also qualified as a chartered financial analyst. And Aditya is going to speak to us this morning on key sustainable development themes for India. Thank you.
Thank you, Olivia, for that rather generous introduction. Just let me share my screen. Yep, is my screen on?
Yeah. It is.
Okay, great. So what I thought was that I'd really look at certain sustainable development themes that are a little out of the ordinary or not in a very conventional impact investing sense, just to reflect a lot of the opportunity that is there and how one can actually go beyond what is, as I said, conventionally thought of as sustainable investment or impact investing, right? So I'll just start by giving you some sense of where India stands at this point in time. And, as a measure of how far along the path India is, we use ESG as a kind of a measure to see how much progress business India has made. And it's interesting, a couple of things really tend to stand out here. The first is that at aggregate, India lags a little bit as far as it lags the rest of the world in terms of where its ESG scores are. It's not by a huge mile, but it does lag. The interesting thing, of course, is that it's on the environmental front that it is the biggest laggard. On the governance front, it's somewhere in between, actually, and I think India has been fairly inconsistent on this, but it lies somewhere in between. But actually, on the social front, it's actually tended to do fairly well. In fact, it outstrips the US in terms of what its social, what the social element of its ESG score is, right? So that's one part. It's quite honestly not a massive surprise, because as a developing country, clearly, I think there are challenges there. Your starting point is much lower, and so to some extent, it is but natural that you need to catch up. I think the other part of it is really in terms of the progress that India has made over these recent years, and I think that's a lot more encouraging. Basically, India has kind of doubled its score over the last 7 or 8 years. It has made progress, and that progress has actually ended up being fairly consistent. So India is still a laggard, but it's moving in the right direction. If you were to see how it stacks up at an industry-specific level relative to the globe, again, as I said, at an average, it's a laggard. So out of about out of 11 sectors that we've actually taken, for 8 of these sectors, India does not meet the benchmarks. But there are 3 sectors, and one of which is IT, where it actually tends to score and does better than the rest of the world. So this is just in some sense, providing a context of where India stands at this point in time. The healthy part of it is, it's moving in the right direction. The challenge is that it still lags global averages. But what I really want to focus on is areas where there are opportunities to invest, and not necessarily in the most conventional sense, right? So I'll start off with the environment. Now, quite honestly, this is a more conventional area of investment as far as sustainable investment is concerned. India, just as a statistic, has 14 of the 20 most polluted cities in the world. There is a constant tussle between growth and the environment. It's at the individual level, it's at the corporate level, and I think the government faces this brunt, very, very substantially. So while it has been a massive area of focus from a policy perspective, it is an area of a lot of natural tussle. But bottom line is, the environment is a conventional space to invest, but I think that is a very large opportunity, simply because a lot has to be done. It is not pure economics. There's a lot of policy involved in this. I think you've seen India being reasonably consistent as far as policy is concerned, as in terms of it being more progressive and being cleaner. I think it's been a fairly inconsistent in implementation, and there have been a few setbacks that the entire framework has actually faced. But bottom line, I think it is also a place where the environmental risks can be so high that to limit those, the investments can be actually fairly, fairly substantial. But from the more conventional ones, I'd actually want to move on to what I think is an area of significant opportunity, something that will provide a lot of social good and in many senses is going to be very, very sustainable. And this is something that is known as affordable housing in India. Just to give you a sense, there are about 80 million people in India who do not have homes. There is a direct shortage of houses of the order of about 20 million. And quite honestly, since the count is not great, those numbers could actually be understated. I think the quality of housing that exists at this point in time is suboptimal. And so quite honestly, this is an area of massive growth. What you do have out here are, the government quite honestly has actually over recent years focused a fair amount on this space. They do provide a certain amount of subsidies. The financial institutions are kind of incentivized to lend in this space. But I would tend to believe the entire ecosystem is such, the opportunity so vast, and the reach fundamentally so deep and so much to the needy, that this is an area that that's a massive potential area for investment, right? The next one is again a little unconventional, but just to give you a sense of some numbers. In the recent COVID downturn that we saw, at its peak, a couple of agencies estimated that the extent of job loss was about 121 million people. Okay, that's almost a fourth of the workforce, and these guys lost jobs simply because they were unorganized. Their bosses shut shop and they just sent them home. There was no labor protection. There were no regulations. There was no contract that were effectively in place, right? And I think this is a massive, massive challenge, that even though in good times you do have employment that comes up, the nature of that is simply not permanent in any form. It's not contractual either. And so neither is it regular, nor does it provide you any protection. So I think this is an area where a certain level of corporatization, a certain amount of training as far as people are concerned, a certain amount of protection in terms of worker rights, I think these are areas that actually can provide you a huge amount of opportunity. So you do have in India, a bunch of companies which are called staffing companies, which really do this, where they give corporations the flexibility of not getting locked into permanent workforces. They provide, they ensure that working conditions and working environments are absolutely right. They provide protection in terms of the nature of work. And I think this is something that's going to actually move along in a very, very meaningful manner. This is something that employers have taken to simply because they don't want to get bogged down by contractual elements of keeping people on their books. Yet they want to ensure that the right guys are being employed and being looked after. So this is another area that, in my view, from a sustainability perspective, is massive simply because of the people it reaches and the needs it actually meets. Okay. The third bit is financial inclusion. Now, this is a buzzword in most financial centers. I think it is actually much, much more real for a low income and a large population country like India. So, a couple of years back, the government actually went out and pushed for an aggressive program where they basically sought to get to provide bank accounts to everyone. And the number that they actually got onto that platform was a good 300 million people. Now, this gives you a sense of the size of the populace out there, which has not had either any access to the financial world or to financial inclusion, or has had very, very limited access. And that is an area which, of course, the big banks are pursuing, but it's opened up a host of opportunities for smaller players, for smaller groups, for some cooperatives to actually bring in a certain amount of formalization into the economy, to bring in a certain amount of formal access to both savings and to borrowings. I would tend to believe that's an opportunity that is huge. As I said, the largest players are there. They do it as a part of their business. But the real opportunity lies much below, where smaller players, microfinance lending institutions, and a lot of other such smaller businesses, reach out to the guy at the lowest end of the pyramid. Again, healthcare, would seem apparently obvious, but in a country as vast as India, I think the recent challenge with COVID actually, kind of spelt out the need and the opportunity there. So the interesting thing is the number of insurance claims for people who got infected by COVID has been absolutely minimal. It probably runs in the thousands when there are about 6 million people who've been impacted. And the reason for that is that while there is plenty of make-do healthcare, it isn't simply formal enough, it isn't supportive enough, and there are massive gaps there. Now, typically the governments do step in. It's not as if the Indian government is not there in a meaningful manner, but the reality is they spend just a little bit over 1% of GDP. And for most houses, if you have to go to a hospital or you need any medical support, 60 to 70% of that expense actually comes out from your income or your savings. So again, this is an area, particularly with things like telemedicine and others coming up, I think that's an area that, again, meets that big criterion for being sustainable, being very purposeful. At the same time, it offers a lot of opportunity in terms of pure economics. And finally, I just want to speak on digitalization. Again, this is a global buzzword. Everyone's kind of benefited from it. But I think the reality is that for a country where both education and access has been limited, knowledge is not as well distributed as should be the case. This is an area that is making a massive difference. There are now about 900 million cell phones out there. There's a huge amount of broadband access that has gone into the country and to the countryside. And I think the benefits of this have already been very significant, both in terms of economic activity, in terms of security, in terms of access to information, in terms of pure commerce. But I think this is just setting out on itself. Now, the very obvious question is, are the big Silicon Valley fellows and the big Reliances or the guys who have the telecom networks, are they the guys who are going to take all the benefit, or is there opportunity beyond and below? And my sense would be that there is a fair amount of opportunity at that level. The ecosystem is there. I think the want is there. With telephones and broadband, the access is there. And I think there's a lot of investment opportunity, which is both going to be economically, which could be or should be economically rewarding. At the same time, it's likely to be very, very purposeful. So I think with that, I'll probably just sum it up and say thank you and open myself for any questions if there are.
Aditya, thank you. That's so helpful and really, really clear. When we think about sustainable investing in India, you can think about those key themes. Are there any questions for Aditya now? We'll have an opportunity at the end, I hope, also to ask all the panel members questions. But if there's anything burning that anyone would like to ask now, do please put it in the Q&A there. Nothing yet, so we'll move on and pick issues up for all of the panel members later. I'm delighted to be able to introduce Ajit Dayal. Ajit has over 30 years of pioneering experience in the investment management and financial services industry in India. In 1990, Ajit founded Quantum Advisors India. Ajit has worked with leading US and UK investment management firms, either as a key member of the executive management team or as a joint venture partner. He's also served as a Deputy Chief Investment Officer at Hansberger Global Investors Inc. USA, and in that role was the lead manager for the Vanguard International Value Fund from 1999 to 2004. Ajit earned his MBA from the University of North Carolina at Chapel Hill in 1983 after completing his bachelor's degree in economics from Bombay University in 1981. Ajit is a member of the board of directors of Pacific Pension Institute. And additionally, in 2001, Ajit set up Help Your NGO to help NGOs in India and NSPA to support street performers. In 2020, Ajit was appointed a member of a committee for the creation of micro-insurance companies in India. And Ajit has authored hundreds of articles for various publications. Ajit, we're so delighted to have you with us. And I know that your remarks are going to be, as ever, stimulating and thought-provoking. Ajit is going to speak on the honest truth, the good, bad, and the ugly. Ajit. Are you on mute, Ajit? I think you are. Ajit, I think you're on mute. Can anyone get a message to Ajit?
No, I have it. I'm on
Ajit,
Sorry,
wonderful.
Thanks. I was doing my slideshow. I can't do too many things at once. I'm at that wonderful age of digital technology, and old age don't cross quite. But I wanted to thank you, Olivia, for having me, and thanks to Dr. Cole and Lord Mayor and the High Commissioner and Indian Partnership Forum. So at the start of the year, naively, we don't know what's going to happen in 2020. So I made this New Year's card, which I sadly cannot put on the screen. And it says Happy New Year and Happy New Decade and hope we make it to 2035. And the reason I said that, because one of the things that concerns us, and we'll talk about that now, is if you look at about total greenhouse gas emissions since the Industrial Revolution, you've had India accounts for only 2% of the total stock of greenhouse gas emissions out there in the atmosphere. And yet India and China are very crucial with 1 billion people each in those two countries. How we consume, what we do, how we treat the environment is going to impact the entire world. And so that's one fact. The good news is that there's enough money available. The various sovereign wealth funds and the pension funds have about $90 trillion of AUM. And the top 1% of the world had 90 trillion of total wealth. And of course, with the share prices increasing of the Amazons and those kind of stocks the last few months, that 90 trillion has certainly become even higher. So just between the top 1% of the world and the few thousands of pensions and sovereign funds, there's $180 trillion of capital. If 1% of that was moved towards green finance or green initiatives, that's $1.8 trillion. 1.8 trillion is a lot of money to get the world moving in the right direction. So my argument is that if you look at, well, a bit about quantum, we've been doing ESG for a long time, but I'll skip that. If you look at India's GDP, since 1980, different governments, India's grown roughly about 6.3% per annum. And the blue bar is global growth, and the orange bar is India's GDP. So it's likely for the next few decades, we're going to continue growing at the sixth shore. And going back 500 years in history, if you look at the yellow bar, which is India's share of global GDP growth, we were about a third, just like China was, 25 to 30%. And then we shrunk as we went to socialism, and we missed out on the Industrial Revolution. And now China in the red and India in the yellow are again growing dramatically. So that again implies Indians are growing in economy and also in terms of consumption habits. What does that mean for greenhouse gas emissions? Well, in 1990, India emitted about 1.1 billion tons of greenhouse gas emission. And now we're at 3.6 billion, which is roughly 5% of the atmosphere every year. On a per capita basis, because we have a lot of people, our greenhouse gas emissions are low at 2.7 tons per individual, which is about 1/6 that of the US and about 1/3 of that of China. But again, as an Indian consumes more, what's going to happen? And these are the little thought-provoking, frightening slides that we need to look at. So if we assume in this chart, so you got India on the left with 1.2, at the moment, 2.7. And if an India becomes like a China in the red, if we begin to emit 8.2 tons of greenhouse gas per capita, this indicate that the sort of delta effect, if you will. And if we consume like an American does or a European does today, then we will emit 18.4 trillion tons of greenhouse gas into the atmosphere as a nation. So keep in mind, today we're at 60 billion tons, and we'll emit 18.4 billion tons as a nation if we begin to behave like an American and European does today in the next 15 years. Okay, so that's dangerous, and that's not going to be fun at all. And of course, when that happens, India's share of global greenhouse gas emissions will rise to 16%, 18%, etc. It'll be frightening, i.e. the Paris Climate Accord, which aims to keep 60 billion tons of greenhouse gas emission by the year 2035, is definitely not going to meet the target. So it's very, very crucial that India is the focus point. It's ground zero. It's ground zero of the virus of greenhouse gas emissions. And you have to put capital to India. If you don't get India right, it doesn't matter what Extinction Rebellion does in the UK or the EU in Europe, it doesn't make a difference at all. You have to get India. Finance available to India is going to be crucial. And I moved to London a year ago, as I was telling my host earlier in the conversation. I moved to London a year and a half ago because I figured London is a capital for greenhouse gas, or for green capital. And India is the biggest user of that green capital to get its greenhouse gas emissions at a lower level. So it's important that we get this right. And you know, in the New Year's card, it's actually a wonderful piece of art. It's 6-page fold out. And I wish I could put that up on the screen, but you can't fold out screens. And I was trying to say that all that's required is a commitment from policymakers in India, a commitment from policymakers in the Western world to put the capital, what we call the asset owners. The asset owners, they always ask me, Ajit, but when we invest in India, what should we look at? The solar power plant, you know, that's a greenfield project. Should we invest in a listed company and try to get there, you know, get to nudge them to do the right things? And Mukund and I are in a partnership trying to do a fund for India where you invest in listed companies that are small cap and you want to get better. So should we take that PE approach to investing in India? What should we do, and which bucket is the money going to come from? And in my New Year card, I say the answer is there's got to be a save the world bucket. It's not private equity, it's not listed equity, it's not venture capital. You got to carve out from that $180 trillion, you got to carve out a save the world bucket. And that's important. And I think India has done a lot, as we heard from the High Commissioner. SEBI has come out with different laws that are forcing Indian companies to disclose more information. But yet at the same time, you know, our government has made probably a misstep where they've changed the environmental laws in India, which require projects to be approved for environmental clearance prior to the project being started. Now they're saying, you know what, you can start the project. If someone complains, we look into it. That probably is not the best thing to do. So there have been certain pluses on the policy side. There have been certain questionable steps on the policy side in India. But I think what's missing is this bridge, which Dr. Kaur referred to at the start, a bridge between London and India. For India, I think I don't want to end on a negative note that things are bad. No, I think as was shown before by Aditya, there are a lot of opportunities, whether in the unlisted space or the housing space or the digital space. Choose it by sector, choose it by asset class, but India must get the capital and India must get policy right to ensure that we can indeed have a planet to live on for the 6,000th Lord Mayor, not just the 682nd Lord Mayor to be around. So we hope that will work out.
Ajit, thank you. Those were really powerful comments. We've just got time for a couple of questions now to both Aditya and Ajit. And there's a question come up. Please do type your questions into the Q&A box, which you'll find at the bottom of the Zoom screen. Very interesting question, which perhaps Aditya, you might want to pick up from F. Leo. COVID is highly disruptive to people's way of lives, health, education, income disparity. ESG takes a back seat for the moment as Indians work through these hardships. At the end of it all, over the longer term, which sectors are likely to benefit most? And I presume by benefiting most, Mr. Leo means will receive the most capital, the most attractive to capital. I hope I've understood that.
So I think that's a fair question. The logical way of looking at it is when there are so many other priorities, then ESG or sustainability gets actually pushed back. Actually, you could swing that the other way around. You know, what are the seismic shifts that you've seen in this entire COVID episode? You've seen a big shift to technology. There's a huge workforce element that actually comes in behind it. The efficiency gains that you've had in people not traveling to work, I think that's massive. If you look at the entire healthcare space, right, there have obviously been challenges with it, but the reality also is that a lot has come together. There have been, there's globally work going on, but within India also at the end of the day, you're going to end up with better health systems. So anyone associated with that is actually going to do much better. And the biggest thing is in terms of that whole digitalization thing that I talked about, you've suddenly had companies over the last couple of months which have expanded multiple times in terms of their market capitalizations simply because they're in the education space or they're in the digital education space. So actually, there have been massive beneficiaries even in this very short period of time. And while they don't necessarily, as I said, fall in the conventional ESG context, I think it actually plays exactly through to that. I think from the environmental perspective, which is obviously a massive element of it, I think the near-term gains that you've seen in terms of people traveling less, I think those could actually be extended. Some of those will be lost because you'll get back to normal activity. But take, for instance, the fact that the train network in India is down. It has been shut for the last 6 to 7 months. There is very, very restricted intercity travel. But the reality is the economy is almost back to normal. You're suddenly getting a sense that, hey, life can go on without, some very, very conventional energy or environmentally negative activities going out of the window. And I suspect some of those gains will actually stay. So quite honestly, given that things are reverting back to normal, given that there have been, I would say, almost seismic shifts in some sectors, I think the gains are up here, upfront from an ESG perspective, rather than actually necessarily getting very pushed back.
Very interesting.
Olivia, may I throw in a slightly different perspective?
Of course, Ajit.
So, my view is that I think in a way, Aditya is right, that you will have a bounce back, but I think you'll have an escalation to way beyond that. And I think one should be careful not to assume that the Indian consumption pattern is not going to be maintained. So while there could be changes, maybe quantum has less office space and maybe people buy a fewer cars or something of that nature. But I think when you got 1 billion people moving in a direction, you can't halt the problem with the environment. And so we should not assume, in my view, that 1 billion people are going to are going to change consumption patterns, and therefore the environmental problem is not there to be addressed. I think it'll show itself up in many other ways. For example, people are going to buy much larger homes, so they have more space to work from within the home. And so whatever you lose in commercial real estate, you may actually sort of regain in a bad way by having all that concrete for building more homes. And Aditya already mentioned 80 million people in India, there's already a shortfall of a lot of homes. So India is going to have more concrete. India is going to have more greenhouse gas emission, even though we're going on an extensive build out of solar power. Even in the next 20 years, coal and thermal sources of power will still account for half of our total power consumption. So there will still be issues that need to get addressed. And I think that it should not be taken as an either or choice. We need policy and capital for both. Policy now to help those who've been hurt in India because of the lockdown, people who've lost jobs and have got unstable incomes. But we also have to keep that money flow going for companies and for everyone to ensure that the environmental goals of the Paris Climate Accord are met.
Excellent. A real call to arms there, Ajit.
Can I make a comment?
Of course, Dr. Kaul, of course.
Listening to what Aditya and Ajit said and earlier comment, our conversation with the banks or pension funds here, UK, USA, I'm told that there is a lot of capital available. There's, I think, 50 billion. I think we have talked earlier, available for investment. And I've been trying to explore, and I would draw High Commissioner's attention also, that there is no dearth of capital. They're saying there is something missing, which the pension funds are not investing in India ESG projects. Why is that? We are trying to explore, but some of that was issues. Can we register the fund at the stock exchange here? Can we improve the governance issues? But I feel, answering Ajit and Aditya's question, that there is capital there, and how I would sort of work, talk to a High Commissioner to see how do we get that capital unlocked for India, and we are trying for ESG projects. There is capital lying here which is unused. I don't know, High Commissioner, if you have heard about that, and you might make any comment on that.
Yes, in fact, thank you very much. Can you hear me?
Yeah.
Yes, of course.
Yes, I recall a comment by our Prime Minister that to his surprise, during the period of COVID, there was a significant inflow of capital. I can't remember whether it was a 20% increase or did he mention 20 billion. This we need to check, but it was a surprising and unexpected, very good kind of development. So let's hope that we can figure out how the funds that Dr. Kaul has just referred to, how those can be channelized. Obviously, we need to make a very, very attractive and a good sort of a case for the flow to come our way, so which we can work on together. So thank you for flagging that, Dr. Kaul. I also wanted to respond to Mr. Dayal very, very briefly for just a second on each point. That is that, it's also surprising how the Indian millions, at the rural level are so responsive to Prime Minister's innovative sort of schemes of public-private partnership or the involvement of the public in better governance. So when he said, stop plastics, there has been a tremendous response in, from the people down to the lowest grassroots level in avoiding plastics. So it's tremendous, the response that can be sort of galvanized across the 29 states of our country, even in the remotest regions. It's quite amazing. And they're very clued up. Each one of them has a mobile phone. They may not know how to read or write, but Facebook and the messages that they pass to each other through the social media are surprising for us who think that mobile phones are, something which is high tech and used by educated people who know how to use, to read and write and use these instruments. The second point is that we're also moving in a very big way towards cleaner coal. So though we will use coal for a long time to come, we're learning how to make it clean usage of clean coal and reducing the emissions. That's something that we've been working on for more than a decade now. So God willing, that also goes in the right direction. And that's also part of India's nationally determined goals. So these were my 3 comments. Thank you so much.
Olivia, may I just come back?
Thank you. Well, actually, I'm now going to bring in Mukund Rajan. Dr. Rajan is the chairman of ECUBE Investment Advisors, a platform created in 2019 to catalyze environmental, social and governance related changes in corporate India. Prior to this, Mukund served with India's largest corporate house, the Tata Group, including as the first brand custodian and director on several Tata boards. He's currently the chairman of the Environment Committee of the Federation of Indian Chambers of Commerce and Industry. Dr. Rajan's doctoral dissertation as a Rhodes Scholar at Oxford University was published by Oxford University Press in 1996, entitled Global Environmental Politics. And his second book, The Brand Custodian, was published by HarperCollins in 2019. Mukund, I'm really delighted you can be with us. I'm sorry that time's running a little short, and I've had to ask Ajit to just hold on until you've given your remarks, and then I very much hope we can catch 1 or 2 questions very briefly, because there are a number of excellent questions on the Q&A. But Mukund, we'd be delighted to hear from you, and you're going to speak on the opportunities and the challenges.
Sure. Thank you so much, Olivia. I'm actually going to keep my observations very brief in the interest of time. Also, my apologies. I'm actually dialing in from my wireless connection. My broadband at home is packed up, which is one of the occasional disadvantages of being in rural India. So apologies in advance. Can you hear me and see me clearly?
Yes, Mukund, we're with you.
Lovely, great. So I think Aditya and Ajit have already offered some very good insights. Let me make a few quick comments. First, I think as Ajit has pointed out, there is going to be a massive focus this decade on climate change and the need for mitigation and adaptation strategies within the Indian economy. There are a number of studies on the kind of capital requirement India is going to have. I think the broad number which most people are looking at now is a $3 trillion investment requirement to help India address the NDCs, is nationally determined contributions. Now, as the High Commissioner also mentioned, I think the government is cognizant of the challenges that lie ahead, and that explains the huge push on renewables. So the Prime Minister has made a statement about a commitment to put in place 175 gigawatts of renewables by 2022. And fairly recently, there's been a commitment to deploy something like 450 gigawatts of renewable by 2030. And likewise, we are now seeing the early signs of a big push on electric vehicles. The Delhi state government was the most recent to announce a slew of incentives for the electric vehicle build out in India. Coal, of course, I think the High Commissioner touched upon this just now, does in some ways present a conundrum, given India's large coal reserves, the employment offered by coal mines across the country, and the dependence of multiple industries on coal-fired technologies, including thermal power. I think the sense broadly is that new thermal power capacity addition going forward is going to be minimal. And there will also be an opportunity for pulling out a fair amount of obsolete and polluting thermal power plant capacity from the system. Just 2 weeks back, the power minister announced there's a several thousand megawatts of thermal power capacity that the government is now prepared to take off stream. My second observation is that, and this is important in the context of our subject today that we're looking at, is really there is going to be significant ESG performance improvement pressure on corporate India. And it's going to be driven by multiple stakeholders, both foreign and domestic. If you look at foreign parties, I think particularly the investor community, some of them prompted by regulatory requirements, such as in the European Union, to disclose the ESG performance of the investment portfolios, others prompted by their mandates to decarbonize their portfolios, as we've seen happening with the Norwegian sovereign. Secondly, the multinational enterprises that are now greening their global supply chains, in which a number of Indian companies feature. Third, the government and regulators. I think in India, certainly, we've seen a series of measures from the Indian government to nudge corporate behavior in a more socially responsible direction. Aditya touched upon this. So we have CSR-linked amendments to the Indian Companies Act. More recently, you have the announcement of the National Guidelines for Responsible Business Conduct. And just last month, a new template for business responsibility and sustainability reporting that India's top 1,000 listed companies will need to produce on an annual basis. Also, the media and judiciary stakeholders, I think, have become quite activist on sustainability issues in the recent past. Customers here, especially I'd include the millennials, who are increasingly buying products or services that tend to align with their own value system and who are driving this mantra of purpose-driven branding in the world of marketing that we hear so much about. And finally, civil society, which I think is now intelligently using social media and networking technologies to get its messages across to both the policymakers and the world of business. The good news for Indian companies is that there is, I think, a growing body of research now that quite vividly demonstrates that organizations that focus on improving their ESG performance do, in fact, do better in terms of financial returns. My third observation, and this is amplifying something that Aditya mentioned, is that within India's ESG landscape, I think diversity and inclusion are going to be critically important issues. And in particular, I think there is a need to do much more to bring many more women into the Indian workforce. And likewise, there's a lot that needs to be done to elevate the status of historically discriminated against scheduled castes and scheduled tribes in India. Fourth, I think there's going to be a wave of opportunities for technical experts in ESG assessment in areas of disclosure and analytics. And likewise, there will be significant opportunities for those offering stewardship services to help companies improve their ESG performance. Fifth, Indian corporates to address many of the challenges and opportunities embedded in the new thrust on ESG, I think are going to have to significantly enhance their R&D spending. This is an area where I think India falls short of many other countries. The national gross expenditure on R&D in science and technology as a percentage share of Indian GDP has been stagnant at around 0.6 to 0.7% for the last 2 decades. China, by comparison, spends 3 times that percentage on a far larger GDP. So I think there's much more that will need to happen in this space. There's some hope from the startup activity that we're seeing in India, and you're seeing all kinds of new initiatives in spaces like electric mobility, energy efficiency, and waste to energy. My 6th and last observation is that there is going to be, and Mohan touched upon this just now, a tightening of corporate governance standards all around. Some of this has already happened. So for instance, the rules around auditor rotation, the creation of the National Financial Reporting Authority, the introduction of the Insolvency and Bankruptcy Code, and the Goods and Services Tax. I think all of this is helping to clean up the corporate environment in terms of reducing deliberate loan defaults and tax evasion. And more responsibility is being placed by the Securities Exchange Board on the shoulders of board directors, especially independent board directors, to oversee and monitor the behavior and ethical conduct of management. I also have great hopes from the stewardship codes that are now being mandated for institutional investors. So if you look at the Indian stock markets, the institutional investors' ownership has grown from around 24% at the time the Companies Act was amended in 2013 to 35% today. And these investors, particularly mutual funds, insurance companies, pension funds, I think are going to exercise much greater influence in the Indian capital markets. And between them and the work of proxy advisory firms and activist funds are beginning to make an impression in India, I think you are going to see a significant elevation in governance standards in India. So those are 6 sort of quick observations on where I think the Indian market is headed in terms of ESG compliance and ESG performance standard improvement. Back to you, Olivia.
Oh, Mukund, that's so inspiring. And it's always so heartwarming in such difficult times to hear about the opportunities. So thank you for that. Ajit, I'd like to give you an opportunity both to respond to the High Commissioner and also to answer. We haven't got very long, but there's one particular question that is, I know, really vital and at the heart of the issue that Dr. Kaur raised about the need for us to facilitate the flow of capital. And that question comes from, it's moved on my screen. Let me just find it.
About the rating.
There we are. It's from Param Shah. The small project size of certain types of green projects makes it more difficult for them to raise the required levels of capital. Institutional investors look for larger investments, above $1 million for domestic investors and above 100 million for foreign investors, to justify high due diligence and transaction costs. Could the esteemed panelists share their views on how we should resolve this? And I know that this is a vital issue from work that the Impact Investing Institute did in 2017. One of the barriers to the growth of the impact investing markets is the question deal size.
Yeah, so
Ajit, would it be possible for you to address that question perhaps? And also, I know you had a short response for to the High Commissioner's remarks earlier.
Sure. Actually, I'll address that question by also answering Dr. Kaur. He spoke about the fact that there's $50–60 billion ready to move to India, but it doesn't move. That's one of the issues. It's economies of scale and costing. There has to be something in between. The pension or the sovereign fund has to invest in a larger VC fund, and that VC fund has to invest in the smaller projects in India. So that intermediation is required. And one of the questions asked by, I think, Mr. Watson on the chat was about standards. That's another thing, this question of greenwashing and hogwashing, if you will.
Ajit, let me just
all the pensions are frightened.
Ajit, let me just raise Mr. Watson's questions, because it was the second question on my list, and just so all the attendees are aware of the question. Okay. Question from Ivan Watson. In last year's forum, one of the outcomes was an understanding that India's reporting standards seem fractured, with different agencies chasing different priorities. So it needs to be upgraded and organised better. Has and should the government take a more proactive role in formalising standards over the past year? And what's the outlook on corporate reporting standards? So Ajit,
So you
away you
kind
go.
of, yeah, so they
Very
both kind of
briefly.
work in tandem to some extent, right? Because what happens is you need a global standard. You have got IFRS for global reporting for accounts, or financial accounts. And I know that the group of 5, which you're involved with, is working on standards for reporting ESG impact assessment. So if you take, for example, specific stocks, let's take Reliance. Reliance is a big chunk of the MSCI leaders or ESG index in India, and a big chunk of the NSE 50. But in many people's screens, including in quantum screens, Reliance doesn't make the cut. It may be a good company, but it has some other things on ESG that may bring it down in the score and not get the portfolio. So an international capital allocator is looking for scale, that yes, if I'm going to invest, either there's an intermediary who takes the money from me, and then he or she can invest and prove to me that they're investing in things that are sensible. That's going to be a global framework. It cannot be government of India or government of UK. So I hope the group of 5 and power to you on that. The other is they're absolutely frightened of greenwashing and hogwashing. That, you know, the field of finance looks at your wallet and they look at themes. And this theme now is environmental stuff around the world. So they're finding ways to take fees from the investor. And investors are scared of that. Therefore, you need to have a proper transparent system across the board with proper ratings, you know, kind of with this standardization, et cetera, et cetera. That'll come over time. But in the meantime, I think there will be the desire of some people to invest and the inability to invest because they don't have these other structures in between. So group of 5 is very, very important.
Thank you. I wish we had all day to talk about corporate reporting, because that's a subject very dear to my heart, but we're 1 minute over. I'm going to hand back to Dr. Kaul. Dr. Kaul, there have been so many good questions that we haven't been able to answer. I think you need to have a longer conference next year. Thank you.
Thank you. Well, thank you, Olivia, for that. And we were hoping to do longer congress at the Guildhall, and we will certainly do that. COVID or no COVID, we will have a longer conference. But thank you very much for sharing this session, and thank you, Ajit, Aditya, Mukund. In spite of your problems on the, you are enjoying in the, is it Bonlieu or Bangalore? That
The Nilgiri Hills, the
yeah,
Nilgiri Hills.
I'm telling it especially because High Commissioner also misses that part of this. That's, she comes from that area, so well, that you are enjoying the Nilgiri Hills. Well,
And I love the Nilgiri Hills. I envy Mr. Rajan.
So, well, a number of issues have been raised, and we will try to put something in consultation with you, Olivia, or as a report, and hopefully we'll continue the dialogue, even if we don't have a forum outside the forum. And thank you for sharing this, and thank you to your speakers. Thank you.